Good morning, ladies and gentlemen. This is Butch Shorak. It's Options University with Market Forecast. It's Monday, May 20th, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Looking at the last week, we certainly had a week that gave us another big move up in the market as the irrational exuberance continues. Looking at the Dow, the NASDAQ, the S&P 500, and the Russell 2000 in that order, we see that as the week ended, we were at pretty lofty numbers, giving us positive moves in the market for every indicator that we have out there. Looking at percent changes for the Dow, we saw that it was up 1.6%. Looking at the NASDAQ, up 1.8%. S&P up 2.1%. Russell up 2.2%, which gives us a lofty numbers for the entire year that we certainly cannot keep going at this current pace, but we have been, haven't we? As we saw huge numbers during this week. Year to date, we see the Dow up 17%. We see the NASDAQ up 16%. We're at all-time highs in all of our indexes except for the NASDAQ. Looking at the S&P 500, up almost 17%, and we see the Russell leading all of the indicators for the entire year, up 17.3%, as we pull an end to the end of May this week. Looking at that, let's take a look and see what kind of economic announcements we have for the coming week. The economic announcements certainly have had mixed reviews, but nothing seems to stop this market from moving up. We got Bernanke speaking Monday morning at 8 o'clock, and that's about it for the day. Looking at Tuesday, we see absolutely nothing. Looking at Wednesday, we got existing home sales. Also, Bernanke out doing his job again. FOMC minutes coming out at 2 o'clock on Wednesday, May 22nd. The one thing that we really have that's consistent every single week, we have jobless claims, and we'll see exactly what those numbers will look like during this May 23rd, giving us last week's returns on the unemployment numbers. PMI manufacturing index also occurs before the market opens. New home sales at 10 o'clock. And then finally, we have durable goods at 8:30. Not a whole lot of information coming out to move the market on this last week in May. So let's take a look and see what that SPX looks like as it heads for new lofty highs. Friday, you have only one thing to say. What is it? A breakout, as we are at the very top of this Bollinger Band and have been there for weeks. We see that our length of time that we have been running has been ever since around April 20th. So we are definitely in an uptrend in the overall market. S&P showing us leading the way up with an all-time high at 1667.47, with Friday closing at that high. Now let's take a look a little closer. But what's the trend? The trend is up. It continues to be up, and it stays going up. When will it stop? It will. When? When it does. Until then, this trend is up, and it's your opportunity to be a bull. All right, is it a little air getting thin up here? It's been thin up here for a while. We had a little consolidation for this week, and we had a consolidation during that week, but look at the week that just took place. In fact, let's look at a little bigger chart and take a look at the last week, and we see that if we look at Monday through Friday, it only understood one thing. It understood heading up. We only saw one day where we even had a red candlestick. So the movement is up, and it will continue that way until it ends. The trend is your friend. Looking at the Dow, we see that it did much the same thing, closing at an all-time high, 15,354.40, showing us that the market, it feels good about where we're going. In spite of IRS scandals, in spite of Benghazi, the market continues to climb, telling us that the economy at least has some bright spots in it. As we look at the NASDAQ, we find even that this market, 3,000 long behind it as it's continued since April, just heading up in one direction, giving us highs for the year as we closed on Friday. Looking at the Russell 2000, exactly the same situation, headed up there for that 1,000 number, which we're not very far away from, only about 4 points. Should hit that this week as we see the trend being up. The trend the last week, up. The trend for the last month, up. The trend is up. What will the VIX do in this kind of an environment? We expect the VIX to be low. We've seen lower levels out of the VIX, but there we are around 12 at the very low of its normal ranges. So we see that not a lot of fear in the market as the market continues up, continues to show us that we expect growth out of the economy as we look forward. We are due for a pullback. A healthy pullback would be good. The longer this extends out, the greater the pullback will probably be. So let's see what happened in some of the other sectors. First, we'll take a look at one of the ETFs that we look at to see what the bonds are doing during this type of move up in the overall market. Looking at TLT, which is our ETF for bonds, we see quite a pullback as we no longer have that runaway with bonds, but still sitting up there around 117. A little bit of a pullback as we looked at Thursday and Friday. Bonds, you can expect that will have a big move up when the market begins to pull back. Looking at gold, we see the gold broke through as we see gold kind of heading for some lower levels as the flight to safety isn't taking place because there doesn't seem to be any big need for it at the moment. What kind of volume did we have during the last week in the SPX? Well, looking at the SPY, we'll see that we basically had around average volume as we continued this upward climb. 129.7 million shares on Friday as we saw that we had another breakout. Not a breakout with big volume, but a breakout certainly with consistent volume, showing us that this market is just chugging along. Looking at the financials, looking at XLF, we see that it also is moving up into new highs for the year, showing us the strength in the overall market is being followed by the financials, which is one of those things that we like to see. As we see the market move up, the financials follow. The XLF was our ETF that we looked at for an indication of what the financials are doing. And finally, our last ETF we're going to take a look at is oil. Let's see what oil has done as we see oil popping up, not anywhere near its previous highs, but as the week went on, oil showed us that it was moving up a little higher and is sitting almost at resistance at 34.50, closed at 34.21. With a breakout in oil, you may see this move back to some of its previous highs. For those of you that are gold members, stick around. We'll take a look at our stocks to watch, see what they did during this big move up in the market as we saw much strength being shown, and we'll take a look and see what our stocks to watch have done during this week. For those of you that are not gold members, if you'd like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. With that thought, this is Butch Shorrock. Ladies and gentlemen, thank you for being here. It's Monday, May 20th, 2013, and the trend is up and the bulls are happy.